All right, let's dive in. Bitcoin is currently trading at around $84,000, $85,000. Interestingly, it has once again dipped below 85,600 and the 200-day moving average, which I mentioned earlier. Today, we'll break it down. Is this a temporary pullback for long positions targeting $90,000? Or the start of a correction toward the $74,000 to $78,000 range? Before we get to the charts, take a look at these numbers. These are whales actively trading in real time right now. They're not fazed by the market situation because there's fear out there, and we'll talk about that too. So instead of buying technical analysis courses, you can get 20 whale-like wallets and a full guide on setting up copy trading for free on our Telegram channel. It'd be silly to pass up an opportunity like this, especially when we're giving it away for nothing. The link's in the description. Go grab all the tools. Now on to the charts. On the 4-hour time frame, we see a price channel we've been moving in for a while. Globally, the trend broke at $92,000. But locally, an ascending structure has formed. We've been bouncing from the lower boundary of the channel to the upper one, but on the last move, we broke the trend line, went below the 200-day moving average, and dropped past the $85,000 to $600 level. The sixth entry point for a position didn't form, and we headed down. The key takeaway here is that we're back below the 200-day moving average, which remains a significant psychological indicator. Now let's dig deeper. At the lower boundary of the channel, around 84,000, you could consider a local long with targets at 90,000 or 92,000, where there's a resistance zone. If 84,000 doesn't hold, the next spot for positions is $78,000 or $80,000. If that zone breaks too, we're looking at $74,000. That's a pullback to the first correction from the last bull run when Bitcoin was breaking its new all-time high. Everyone remembers what happened in November. From there, you'd set a risk-to-reward ratio of 1 to risk with targets at 85,000 or 86,000. Let's recap. Longs start at 84,000, 78,000, or 74,000. These are the key levels. On the higher time frame, there's a bearish setup, possibly a bear flag, which makes a decline more likely. Above $92,000, I don't see any setups yet. Only after a breakout and consolidation can we talk about new highs. If you've made it this far, it's clear you're genuinely interested in crypto. But let's be real, not everyone grasps the importance of trading on a secure exchange. And no, it's not Bybit or Binance, it's BitUnix. First, AI Traders channel subscribers get a welcome bonus of up to $5,500. Second, the fees here are half of what you'd pay on Bybit, which matters because fees can eat into your profits. To claim the bonus, subscribe to the channel and follow the BitUnix link in the description. Otherwise, it won't work. As promised, let's dive deeper into the market. The Fear and Greed Index is in the fear zone. The market's in a bad mood. U.S. GDP data points to high inflation, which could keep Fed rates elevated longer. That's not a great signal for the market. The S&P 500 is also showing a bearish structure, similar to Bitcoin, a bounce off the 200-day moving average on the daily time frame, and a potential breakdown from a flag on the 4-hour chart. That's all I've got, everyone. Done right, straight to the point, no fluff, and packed with info. And don't forget to copy the whales trades on our Telegram channel.